Morning. Mike's wasn't working. Oh, that's a bit loud, isn't it? Let me move that down a little bit. Seems a little bit loud. Hang on. Is that all right? Volume wise? Computer problems. Updates. Didn't work. Everything's gone wrong this morning. Literally. Morning, Mark. Morning, Evil. Literally, name it. It's gone wrong this morning. Morning, James. Morning, Sarah. So, my lights have gone in my office. I've got a lamp on my desk. This thing, because that's what it looks like in my office at the moment. It's daytime. My light switch is broken. I had no lights this morning. Microphone updated overnight. So if I'm booming in your ears, sorry, but they've updated the microphone. Now all the levels went all completely wrong this morning. I discovered a bug in the zone trade at EA, which didn't close all the trades. So I had to do some manual closes this morning. And Trump's in charge and destroyed the market. So, yeah, it's going well today, isn't it? And I'm late. So, yeah, this morning I was meant to be spending the first sort of half hour before the stream getting a stream ready this morning. I haven't had a chance to do anything. So I've just quickly changed today's stream to be a Q&A session. We can discuss anything and just talk about whatever. Get it out there and do all the normal analysis. So sorry about today. I haven't had anything prepared because, yeah, nothing's worked today. But anyway, we're going to go through Trump and see what he's been up to because obviously it all changed yesterday and overnight. Morning, Barry. So sounds okay. Is it good? Cool. Markets have opened. DAX and FTSE. I haven't even got my pen open. What the hell is going on this morning? So don't want to buy your pen app premium version. Markets have opened this morning, obviously. Nothing triggered so far on the FTSE. DAX has just triggered a short. Good day yesterday. I didn't trade the open yesterday. It was an early close yesterday in the US session. I didn't trade it. There was actually pretty good breaks. So, but unfortunately I didn't trade it. So we'll see where we go today. As you can see, overnight there's been a little bit of volatility. So Trump last night, obviously got inaugurated yesterday. He said a load of stuff. Let's just get the US pound US up. Let's look at a 5-minute chart. So obviously we had a spike like that and a spike like that within 24 hours of him being inaugurated. So this here was basically overnight. He said he was going to introduce a load of tariffs. 20. It's actually not in red, surprisingly. Oh, Trump declares a national energy emergency. Anyway, that wasn't the thing. That wasn't red this morning when I looked through. They've changed some stuff to red that wasn't red this morning. But basically, he came out and said he's going to invoke a 25% trade tariff on Canada and Mexico. So, of course, the Canadian dollar collapsed overnight, which was lovely because my pound CAD. Look at that for an exit. I mean, talk about luck in trading, yeah? Look at my exit. Look at the high of that candle. That was my exit on pound CAD. The EA did this overnight, obviously, not me. So the EA got me out overnight. One ADR target, exactly where price turned and flew away from. So morning, Phil. So yeah, nice exit on the pound CAD last night, but obviously it caused the CAD to go into meltdown, what he said last night, because obviously Canada suddenly gets 25% trade tariffs. Not sure if it's happening. It was announced, but not necessarily signed off. So obviously this is Trump, right? And so I've been saying it for weeks. I've traded through a Trump premiership. Anybody that's any under 5 years worth of trading under their belt, you haven't traded through Trump. This is, well, you may have traded through the end of his era, but this is what happens when Trump is in charge. He says stuff. He just says stuff and does this. So 200 ADR moves, absolutely normal. Not real though. So that one completely undone. So anybody that took a mean reversion on that, well done. You got out last night. Good short. So a lot of these moves will fade back to A-shaped recoveries and V-shaped recoveries. So just be aware. You're going to see this a lot. Don't panic. Your P&L is going to go stupidly fast into drawdown and then massively quickly into profit. So that's just what happens. You can take massive advantage of this. Yeah, so I banked 2.6% overnight on that move on the CAD. Luckily, I had some decent size on it. I had 4 positions on there. It's actually 3. I took a double here because I was taking an ADR reversal and an RSI extension at the same time. So the EA took 2 trades. Something I've turned off ADR for the moment. That's something I need to look at on the position trader EA. Shouldn't really be running both strategies, obviously, but so yeah, had 3 trades on it really. So nice profit, 2.6%. So my targeting at the moment is 1 ADR. So that was 1 ADR above the average. So you can make some serious money out of Trump because he will make the market move to places it shouldn't move to, and there's no reason for it to go there. So targets, set your targets nice and high and let Trump do this for you. Obviously, this is the first day in, and the first week he's going to be signing off loads and loads and loads of pieces of paper. There you go. So Trump signs action to withdraw from the World Health Organization. What the hell is this idiot doing? Trump instructs Attorney General to refrain from taking any measures against TikTok for 75 days. So basically he comes in and he just does stuff. And then he goes, everybody, this is what I've just done. Deal with it. Not like every other president that goes, I'm thinking about doing this. Give me your advice. No, Trump does it the opposite way around. So we get these ridiculous spikes because he tells everybody before he consults. But anyway, halts leasing for offshore wind farms on the continental shelf. So basically he's now not going to go green, not going to use wind power anymore. Yeah, this is the sort of stuff this bloke does. Ends Biden ban on exporting liquefied natural gas. Eliminates federal, just he's signing pieces of paper at will, isn't he, basically? So just be aware this is the next couple of weeks worth of our life. But anyway, so overnight news, that's all of that. Today we've got the claimant counts come out already for the UK this morning, 0.7, so a positive move on claimant count. Not a massive move on the pound that I could see. We've had some movement, obviously, but nothing particularly dramatic. It's all been overshadowed by this massive move we had on the Trump thing. But so there's your 7 o'clock candle. So that is the news. No impact really, but I don't think anybody's going to make any impact on anything at the moment because unless it's Trump opening his mouth, the market's going to be scared to move anywhere. So this afternoon, we've got the CAD CPI number coming out. Poor old CAD. If that comes out negative, they're stuffed. So we've had a massive week drop on the CAD. Got to help them. If it does come out at a negative 0.7, you can kiss the CAD goodbye. So be careful trying to mean revert this CAD move because if that comes out negative, CAD's going to disappear. We could see a 300 to 400 ADR day today on the CAD. But anyway, so that's this afternoon's news. We've got the CPI coming out overnight as well for the New Zealand dollar. That's 15 minutes before market close today. So just be aware of those two coming up today. So what I'm going to do today, we will do a sort of any questions you've got, anything you want to cover, just shout and we will talk about it. Yeah. But what I want to do today was just go through hedged on the DAX, long on the FTSE. I just want to go through the zone trade EA because I discovered a bug in it as well. I don't know if any of you are using it, but overnight I closed out quite a few trades. So pound, sorry, that's the wrong one. So pound CAD closed out. As you can probably see here, this was the trade that the EA closed, this one, but it did not close these two. So I've closed them manually this morning. There's an issue somewhere with the loop that runs. So the way the zone trader EA works, I've got to reset up all the zones today, so we'll go through that as well. The way the zone trader EA works is when you get to a zone. So if we had buys on, for example, as we did there, when it gets to the zone, what it does is for FIFO rules in America, where you have to close the oldest trade first, which is first in, first out. So if you take 3 trades in the same direction, you have to close that one first, then that one, then that one. They won't let you close that one on its own or that one on its own. It's got to be done in the FIFO rule. So to do that, what the EA has to do is when it gets to the zone, it goes, okay, if there is an open short, close it using the oldest one first. If there's an open short, close it using the oldest first. If there's an open short, close it using the oldest first. Then continue with the rest of the EA's programming. What I've discovered is, obviously, because you've got the Zone Trader EA running on multiple instruments at the same time, it's triggering the same process on every instrument at the same time. So some VPSs and terminals, basically in general, or broker accounts will struggle being able to do every single order because it will get bombarded with do this at the same time. This has only come up because of this Canadian move overnight, where normally you would have not everything hitting a zone at exactly the same time. When it does hit the zone at exactly the same time, it tries to do everything at once and it can't always handle it. So this is where this problem has arisen. So what I've done is I've released a new version of the EA this morning, version 1.31. And what it does is it goes through this loop of closing these out. If for any reason it gets interrupted before it's completed that process, the next time it runs, it gets a close all orders. Yeah. So basically what it will do is if it can't run through that loop, it will just get told to shut the lot at once. So it's kind of a fallback for issues like this, which are intermittent, won't occur very often, but when they do occur, you spot them because loads of things should be happening at the same time. So I've released that update this morning, which means I've got to go through and do all the zones again. Yeah, so it'd be a good process this morning. I'll go through my logic, my thinking of where I'm putting things and why I'm putting them there. So it'll be another support resistance session we'll do this morning because I've got to go through and reset all the zones up. So feel free to ask questions as I go. So there we go. So just quickly looking at what happened overnight, first of all. Obviously, pound CAD, I'm out, bank 2.6, up 11% on the month. There's the drawdown. Everything else is kind of okay at the moment, nothing particularly dramatic. ADR wise, obviously, there's ADRs all over the place. As you can see, it's all about the Canadian dollar. However, that move affected virtually everything this morning. So we've had 125, 175 ADR hits, a 200 ADR on US dollar CAD. All over the place. Yeah, so everything kind of got spiked. Look, Aussie Swiss, absolutely nothing to do with the Canadian dollar, but don't forget everything is interlinked. When one thing needs to move fast and hard, like either the US dollar or the Canadian dollar, you need to pull money out of other instruments to make that happen. Or if you're selling off the Canadian dollar, you've got to put that Canadian dollar somewhere, convert it into something else. So every FX pair tends to move on these spikes, but obviously some are affected more than others when Trump's talking. So the US dollar CAD move, obviously the biggest affected one was the US dollar CAD because he was announcing trade tariffs on Canadian dollar, which means basically the US dollar will benefit. So the US dollar rallied at the same time as the CAD dropped, which means you get the biggest, strongest move on the US dollar CAD. If you look at all the other US dollar pairs, they all had a spike because people were like, oh, that's going to be good for the US. But like I said, 90% of the time when these things happen, they just undo themselves. Immediate A-shaped recovery. So whether that is actually going to be a thing, 25% trade tariffs, we'll have to wait and see. But anyway, so there's ADRs all over the place today. You can take all of them. There is a good probability that they will all revert, but it's so dangerous at the minute getting into new positions because we just don't know what Trump is going to say next. He's got a list as long as your arm of stuff that he wants to implement when he gets in. It's all going to come out this week. So I think every day this week we're going to see something or other coming out. But as you can see, it's a big move. It's an ADR. But is it really a massive move? We've had quite a few of these big moves, haven't we? Yeah, and it just doesn't really do anything. But there are some things he's going to say and some things he's going to do which are going to move the market. So there's a load of ADRs today. They're all opportunities potentially for mean reversions, but they're very, very hard to get into. That reverted 50% of the move pretty much within the hour. So not really a standard easy ADR to get into, are they? RSI extensions, Aussie dollar CAD is extended on the 4 all the way up to 125 ADR there, but we're extended on the 4 hour. So pretty good level we've just taken out there, which is that propulsion gap. We resold that multiple times. Previous support, yeah, we broke through it, retested it multiple times. We've just hit it again. So potentially good move down, but is this going to potentially long-term weaken the CAD? Don't know. We need some more confirmation. Signing a piece of paper saying we're going to put, let me just search for 25%. I want to find it. There we are. Trump considers, yeah. So this is the buy the rumor, sell the news. He's considering imposing 25% tariffs on Mexico and Canada. He hasn't done it yet. But would you want to buy the Canadian dollar now, today, because of that? Hang on a minute. What if he does? Yeah, so there's going to be, it's going to make it difficult for the CAD to rally today, because obviously the markets will be thinking, yeah, if he does that, we don't want to be in the CAD, do we? So it could long-term weaken the CAD. He may come out and say, I've decided I'm not going to do that. I'm just going to put 2.5% on them, in which case it's all going to go back the other way. So, this is fundamentals at the minute are kind of having to be put on hold. It doesn't matter what you think an economy is going to be doing over the next 3 to 6 months. It will do what Trump decides it's going to do. So just be careful with sort of everything you look at the minute from an analytical point of view. From a technical point of view, candlestick patterns, charts, just not going to, trend lines, they're not going to hold up. Everyone was shorting the hell out of it yesterday. It's not going to work when Trump's on board. So just be wary. RSI extensions, yeah, I mean, it is strong move in that direction and it will want to pull back. But the amount it will pull back may be less than normal until Trump says, actually, we're not going to do the 25% tariffs. And then we'll be down there. So, yeah, it's just get in, hold on, and deal with what the market does. This is the beauty of position trading, in that you get in, and if it's wrong, you can get in again and move your price. That's the whole point. So affects us a little bit less, but it means we might get some fairly protracted squeezy moves starting if the fundamentals really shift. So trading in line with swaps, more important than ever at the moment, I think. Euro CAD also extended. Again, you're going to struggle to get into that one. I've got a short on at the moment, but already done that retracement, massive extension, but you've missed that much of the move. So I didn't get another short on that, look. So my next short entry line is here, but obviously I'm not in it. We did open above and close marginally, close below the moving average. So this is going to be the trigger here, but I'm not going to get this trade on because price is below the level. So there is potentially a second entry short there. Oh, do I want to take that? It's a high rejection as well. Look, I might just stick one on that, I think. Yeah, I'm just going to put one on. It's so close to this whole area is where that next entry level was. So next entry would be a double top on that high at 200 ADR. Average is now there. If this does a A-shaped recovery on this move, I'll get out. So I'm just going to take another one at Euro CAD. pound CAD also extended, obviously out of that one. I'm looking to long only, not shorting this one, so no entries on that one for me. New Zealand dollar CAD also extended to the upside. It's all the same pattern because it's the same thing. So I'm looking for longs on it. I'm not going to get in short, but you know, they're all very good opportunities because a lot of it will undo. But that is a big thing. You know, 25%. Think about it. The trade tariffs, for example, Canadian timber, huge. Every business pretty much in America that manufactures stuff, at some point there will be wood involved somewhere along the line. If you've now got to pay as a business in the US 25% more for the timber you import from Canada, that's not going to help the US economy, is it? Or because all the prices of furniture, for example, are going to go up. From Canada's point of view, they'll be going, right, if you're going to stick 25% trade tariffs on everything that you get in from us, we just stick our prices up by 25%. That's where trade wars start. Yeah, and it all becomes this huge escalation of inflation, which drives up interest rates. So you just got to be a little wary about what is said, because he might say it, but actually doing it will have a huge impact, not just on the US, but worldwide. Yeah, everybody follows the US. When the US interest rates start to rise, they rise in the UK, they rise in Europe, they rise everywhere else. When they flatten out, everybody flattens. Yeah, it's the world economy, the US dollar. So everything follows it. So he's got to be a bit careful what he says. But obviously at the moment, we know that that's not necessarily the case. So there you go. So there's all the RSIs and ADRs. That's what I've got on at the moment. So just sitting, waiting for the rest of that to kind of play out. Quick look at indices. I think the market's in a little bit of shock. If you look at the Dow and the Nasdaq this morning, there's the Dow and the Nas. Obviously, both of them fell over last night, and they've retraced into the move. But now we're sort of basing around. So these, I would say the market probably will want to be a little bit longer today than normal, because I think they probably want to get back to here. Anybody that's not trading the Globex session and is going to want it to get back to where it was. So I think there's a chance of bull moves today. So these the DAX and the FTSE today, I'll be airing more on the side of the long break than the short, but we'll wait and see what happens. So I'll let those two play out. Right, so I need to do the zones this morning. I've got to go through and redo all the zones. So my zone trader account at the moment, we've banked 10% this month so far, 13% drawdown. Kind of ignore the percentages a little on this, because I'm not using percentage risk on this account. I'm using 0.1 lot across the board with lot increments on top. So my risk is being handled slightly differently on this, and I've only deposited a small amount into the account, so I will top it up. So the percentages are kind of not as important for me on this one. It's more about, you know, just banking and waiting for the market to move to the zones. So I will go through all of these. Anybody got any questions on anything at the moment about anything, specifically Trump or whatever? I had a look through a document as well that somebody posted in the Discord group this morning. I only had a quick read through it, but it was to do with where did they put it? In the ORB. So it's basically a document about a study on stock indexes. So it's to do with basically the opening range breakout strategy, obviously, that I trade already, and an analysis based on volume, which looks pretty interesting. This is done by the Swiss Financial Institute. So obviously the part, not so much part of the SMB, but obviously part of the Swiss area, when they're obviously very intelligent, very rich over there, and they know what they're doing with trading. But they did analysis of multiple opening range breakout variations So there's a few bits in here that I think I'd like to model and try. So I might look at doing this on Thursday because I'm going to try and build an EA to do this. But what they're saying is basically the first 5-minute candle, the color obviously designates direction of break. So what they're saying is if you get a bearish open in the first 5 minutes, the opening range for the first 5 minutes is bearish, only go short. And if it's bullish, only go long. And also only go if the volume is high enough above the average. Yeah. Now, the problem with that, obviously, in CFDs is we don't have centralized volume. But what we can do is what I already do with the SIH strategy, which is use the size of the candle, because when you get high volume, you tend to get a larger move. So I'm targeting 10% of ADR at the moment as a minimum that I want to see here. So with the SIH strategy, obviously we do already monitor that. So the minimum range here is 89, that's 10% of ADR, and the maximum range is 20% of ADR. So there's things that we can do to kind of replicate or simulate what they've done with this study within CFDs, because volume isn't centralized, so everyone's going to get a different reading on volume. However, volume is relative. So if you've got a broker with low volume, you're still going to get a higher volume spike than previous. So it's measuring the previous 14 days worth of volume. So there is possibly a way that we can use broker volume to do this, assuming that your broker has enough of it. So I'm going to go through this in a little bit more detail and read it. But it's got some pretty good findings. And this is to do with stock trading rather than indices, but it's all the same thing. But what they're saying is if the relative volume at the open is over the average, basically, the higher that is, the more profit or the more likelihood the clean break will occur. They're using a slightly different strategy in the fact that what they do with their opening range break strategy is they take, as in this example here, a long with a stop at 10% of the average daily range, and they let it run. They do not touch it all day. There's no trailing stops, there's no banking, there's nothing. They literally let it go and they close it end of day. So that is a very simplistic strategy, obviously. So if the candle's green, the first 5-minute candle's green and the volume's high, take a break of the high with a 10% stop, wherever that may be, and then close it at 4:30 p.m. That's it. Simple. There's a hell of a lot of ways that you could extract a lot more money out of that by identifying, obviously, levels of support, resistance, etc., etc. So I'm going to have a look at the document in more detail and just see if there's a way to model some of these and test some of these kind of theories, if you like, within CFDs and doing back tests. But there you go. So there's a difference. So this is the ORB strategy. This is their ORB strategy, not my ORB strategy, but it's similar. Mine actually performs better than the S&P. There's the variation they used as a base obviously didn't perform as well, but this is their variation based on using relative volume, which is akin to what we do with SIH using this. So, you know, it only trades if these are Goldilocks zone. Yeah. So I already have a variation of it running with SIH, but I'll do that and we'll maybe do a session on it because I think it might be quite an interesting one to look at. But there's lots of variations as well they do with the 5-minute, 15-minute, 30-minute and the 60-minute ORB. The 60-minute ORB in futures is referred to as the initial balance. So the IB high-low is the first 60 minutes trading. Unfortunately, 90% of the volume is done in the first, not 90%, but over 50% of the volume goes through the first 60 minutes. So taking 60-minute ORBs, as you can see, isn't actually very effective because it's already done the move. You've missed it. Yeah. Within this is why we have this dotted line drawn on SIH. This is the 1.5 hour line. Within that 1.5 hours, You've usually put the high or the low of the day in. The volume's there, it's done, the moves are done, the money's made. Now we'll see whatever happens for the rest of the day. So you can clearly see that the 5-minute ORB there and the 15-minute ORB, which is the other variation of the strategy we run with the ORB EA, are the two to be traded. Yeah, but the combination of all of them gives a pretty healthy profit curve. However, that is over 10 years, risking 1%. So at the end of the day, you look at a 25 grand account, making it 75 grand in 10 years, 7.5 grand a year. It's not really setting the world on fire, is it? But very low drawdown. Very low drawdown. So I'll go through that in more detail. It's interesting. I'm always interested in mathematical studies like that because, you know, this whole thing works on statistics. And you need to look at, you know, edges, and that is a very, very clear edge. So I will look and test that. FTSE is off. ADRs we're going to have to take with a pinch of salt today. That's ADR high today, but only because of the pre-market, which isn't really pre-market movement. So ADR really today is not something to pay much attention to. With the FTSE, obviously, the other problem we've got is we're at all-time highs. So yesterday we put an all-time high in, which broke the previous all-time high from Friday. All-time highs again today on the cards. So TP1 for me is up there. TP2 is all the way up there. We'll have to see where we go. But if we break that all-time high, if you look at what we did yesterday, we put in a break of 186. That would be 160. So if we're going to break the all-time high again today and we get an equivalent pop, that's what TP3 would be. So to get to TP5, it's going to have to put a hell of a move in. We have a catalyst now that can do that. It's called Mr. Trump. But we'll see. Anyway, right. So we'll see how those go. DAX hedge targets. All-time highs everywhere, aren't we? So yeah, again, with the DAX, we managed to get 135 out the highs. Today's all-time high break to 5R would be 463. So that's half of yesterday's movement. $217 was the break there. That one did 750. So if we do break all-time highs today, that's a very conservative break. So I'm just going to move that up. Because what I don't want to do is get caught in a move that goes that high when I've got out here. And obviously we're just assuming it's going to continue to go. So right. And downside obviously would need to, downside's got a load of room. This whole propulsion area here is target to the downside. We'll see where we go. Right. So zones. Any questions as I go? Shout and interrupt. If you're watching on replay, comments, Discord. Right. So Aussie dollar CAD. I've got short on at the moment. Obviously you can see it's very bearish. So next entry Aussie dollar CAD is going to be here. So I'm targeting that zone there, which is the previous support resistance area. So somewhere around this area here is where the buyers got run over. So looking to come back into that area, which will also be a double top of that high for the next short. Target to the downside will be anywhere. I'm going to stick it all the way down there at the moment. I don't think I'll hold it until we get all the way down there, but obviously it's bearish. So Aussie dollar Swiss have shorts on at the moment, so need to put another short on and a target. target to the downside. Lots of areas of interest. So somewhere down there, which is where we keep bouncing out, which is the previous resistance. Get out of the shorts there. Upside target. Anywhere up there, really. I mean, it's just a case of trying to find somewhere we're going to reject out of that area there. Anywhere up there will be fine. Aussie dollar yen not trading, so I'm not going to trade the yen at the moment. Still don't know what's happening with the interest rates on Friday. So Bank of Japan obviously going to be upping their rates potentially to 0.5 on Friday. Until that happens, really don't know what to do with the yen. I want to long it because I believe that the carry trade is going to continue to run. But after this intervention, it's very difficult to tell whether it will or not. So I'm kind of still sitting on the sidelines. I've obviously been trading in. It's working fine because it's not going anywhere at the moment. But if it does take off, there's a possibility of getting stuck in a squeeze. And if there is a squeeze, I do not want to be short. I want to be long. So I'm going to leave it for the minute. I'm leaving the Aussies alone. Aussie New Zealand have a short on at the moment. Target... to the downside. I mean, next sell is going to need to go up there somewhere. It's a bit of a messy chart, this, isn't it? Yeah, this is the one I couldn't figure out where I wanted to go with it. So anywhere, it's an impossible scenario, this one, because it's three massive high spikes here. This obviously is too close to get another position on. So anywhere up there. Downside target, obviously that's the low that we've tested. So we're putting in higher lows. Should really look to get out of this. But if this is going to now be a market structure break and we're going to hold that high, I would expect that sort of price action to come. So we're looking to come and test these areas down here. So I'm just going to stick my sell zone a little bit further down. Where's the next resistance? Anywhere down there. So as we start to push down, if we break that low and we come and test this low, it's either going to bounce off of that low or it's going to come down into somewhere in here. And then when it starts to push back up, I'll flip along and get out the short. And we'll watch that zone up there. Aussie dollar, US dollar. I've also put the support resistance propulsion indicator on so that we can see clearly what they are. So again, longs on this at the minute. So targets for exit, I was looking at this area here. So basically we pushed down, we broke out of that low, we double bottomed it, and then we broke it and we accumulated, and then we had a news event drive it down. They've been reselling the news. So we put in a new lower high again today, potentially. But obviously we are starting to roll up. So if this is going to be the peak formation low, this is a nice wick off spring type move. I would look to come back up into there and see if we find sellers again above that high and basically stay in some kind of range. So that's my target to the upside. Next buy will be too close, somewhere down here. Can't really pick a level because there isn't one. CAD Swiss, out of the shorts. Again, this is another one you can see. EA closed out 2 positions for me, but didn't close out those 2. So I closed those 2 out manually this morning, the shorts. So out of the shorts, that was a target I had set at this level here. Yeah, so got out of there, and obviously now it's flipped long. So next, we'll look at, obviously, I mean, it's not so much this, it's more that wick. So looking to see if we double bottom this wick at some point in the future, which is basically coming off of this level here. Target to the upside. If we're moving bull now, and that is going to be the new sort of price action, we should be able to get out at the highs, but I'm not going to be that brave today. I'm going to go literally for a quick scalp move on this, just to try and see if we can do a V-shaped recovery on this leg. I don't want to get in short, so it won't get in short for me. I only want to take longs, but equally, I'm not convinced we're going to necessarily go much further. We've got the CAD news this afternoon. Actually, we've got the CAD news this afternoon. So two things to think about. We've got CAD news coming up at 1:30. So one of two things is going to happen. The CAD news is going to be bad. Yeah, we're going to go straight down. The CAD news is going to be good. It's going to get to there. CAD news could be very good, and we could be coming up and retesting up at these highs. So there's a couple of trains of thought on this. And the easiest thing to do to make sure that I get the maximum profit out of it is that, because if it's going to get back here before the news at 1:30 and we get like a good couple of 2-3 strong hours worth of movement that does that V-shaped recovery, as soon as we get a bear candle, I'll close it and just take that money. If it pushes up into here and the news does that, brilliant, I'm going to get out with more profit. If it's bullish news and it continues to fly and comes and test that area, I will get out up there. So it makes sense really just to look at the origin of that news and assume it's either going to be fake news, Trump's term, and we're just going to V-shape recovery it, or that news is going to be massively bullish and take the CAD out into new highs. And if that's the case, I will just go along with it, and that trade just gets out when the market starts to turn. If it's bad news for the CAD, we're coming back down. If we break that low, I need to get a new position on somewhere down here, and it's a bit of a mess to the left. So that's my thoughts behind it. Is I've got a long on, it's starting to work, we've got a potential V-shaped recovery off the back of what Trump said. If it's going to be good news this afternoon, just let it ride and see where we go, and let the market get me out when the market wants to stop going long. Downside, we've got plenty of areas here, 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 and here, potentially for bounce points. We've got an area here as well, which was accumulated around for quite a long time, which once we finally broke it, acted as support again, which was a previous resistance. So that's a good support resistance zone. So it could well break straight through that level, hit that level and bounce there, in which case obviously the rectangle will get extended and I'll get in somewhere around there. This is the beauty of using the zone trader EA and using zones, is you wait for the market to tell you when it's going the other way. If it continues down and we get 3 hourly bear candles in a row, I will still wait for the market to go bull, because I do not want to get in unless there's bulls on my side, because you're highly unlikely to be able to make money, get a decent price if you just take an order there and it screams down, take an order there and it screams down. You're just taking these orders and taking drawdown on them for no reason. So we get in when the bulls start to get in with us. CAD Swiss, CAD Yen, not trading again. If I was going to trade it long, this is a really good entry. This is supply demand zone. Yeah, so this is the origin of that move. Yeah, we're just retesting it right now. But then this is the question: is this just a V-shaped recovery on that, and we're going to get increases in Japanese interest rates, which means it goes down, or not? There's too many catalysts and too many Trump effects on this thing at the moment to even think about it. But the play intraday, if you wanted to use a stop loss based strategy, is hit the buy button right now and assume that we're just going to do that. So kind of a 1.5 hour quick try and revert the move basically, but not for me. Swiss yen, same thing. Euro odd have shorts on. So next area to sell is the gap. So yeah, I'm assuming the gap fill is going to get done, or we're going to hit that high. So we're either going to come and do this, or we're going to come and try and do that. So that's my next short. Going to get out at the lows. So looking for a retest of this, and assume we're going to hold a range until it breaks. And if it breaks, it breaks. But I'm short only on this, so I will not get a long on because the swap's too expensive. EuroCAD didn't get the next sell on because it just spiked straight through it. So sell zone is going to be the same. In fact, sell zone is even more valid now. Look. So yeah, up there somewhere. Look for short entries. Exits to the downside. I'm going to look at this area here. So if market structure is going bullish and we get back down to here, we should be putting in a higher low. So that would be where I would get out of the shorts in case we do that. It could well just come straight down and touch that. So if we are in a range, that's your range low. Somewhere down here is your range low. So it's just going to sit and flip-flop around like that. So that's an easy, obvious exit point to the downside. Euro Swiss. Longs are exited. Shorts are too expensive, so I'm looking for new long entries on this. So we have just made a new high, haven't we? So I'm going to look at this area here. Yeah, so we've got a double top, low, high, low, higher high, looking for a higher low to go in. Yeah, so that is the next step up in that leg. So in theory, this is exactly where the long will go for. But if we're going to use that, one or two things is happening in play here. Either that is going to happen, we're going to be higher low than that one, or that is in play and we're looking at a higher low than that one, that double bottom, which is kind of what they've done there, which is previous resistance. Turn support. So look for a double bottom somewhere off of that. I could take one here. But if this is a double top, triple top rejection, i.e. a false breakout, we're going to be coming back down into here. So I don't want to get in too aggressively and need to scale in all the way down to there. I'd rather wait and get in halfway in the middle of the range, and then I've only got to worry about maybe taking 2 extras. So wait and see if I get triggered on that long. Euro pound shorts on, exit, just one out of this, got 5 positions on. So targeting this accumulation to the downside. Next sell. I mean, there's just nothing to target on this until you get all the way up here. There's just nothing around. Look, we've got this big level here. We're at the highs, rejecting, which is nice. So I guess if we can double top that high, I'll get another trade on. But we are double topping or triple topping at the moment. Needs to be 4 hour on this kind of area here, aren't we? Yep. So we hit that. We bounced out of it a little bit before we broke it. Then we retested it. It's kind of this area. We tested it again there. We just tried to break the highs again, but look how parabolic this is. It needs a pullback. It needs some kind of pullback. 50% retracement. So that, I think, might be a bit eager but if we can get back to somewhere around average and I can get an exit on it, I'll probably just take it, but we'll wait and see. So I do need to scale in if it's going to continue to push. Euro yen, again, not trading. Euro New Zealand have sells on. So next sell's nice and easy up there. And my exit to the downside is much trickier. That area there is an obvious resistance. Turned support. So that's an easy exit to the downside. However, if we do break that low, we've got a load of chop and a load of levels in here that could react from absolutely anywhere. So there's just basically an area of congestion we've got to try and get through to get to that zone. But at the minute, we've been going sideways for 3 weeks, so I don't need to worry about it. I'll worry about it when we do break that low. If we don't break that low, I don't need to worry about it. So I'll just wait and see what happens. Euro US dollar, exited longs on the spike. So yeah, in short now. So next short on this one. This whole area here. So it's that low there to that high there, that high there. Yeah. So we hit this area here, broke it, retested, retested, retested. So the sellers are selling from that level. Yeah. So if we get back up to that level, I will sell with them again. Bearish euro against the US dollar. I mean, the ultimate goal on this one would be to come back down to the lows. So I will see what happens with price action over the coming weeks, days rather, and see if we can get down to those lows. You never know. Yeah, it's Trump. 200 ADR target. Yeah, let him pay you if he wants to pay you. Pound odd. Got longs on at the moment, stuck, stagnating. Next buy needs to be down below the zone somewhere. So if we do break down, I'll just get in long again. Shorts exit target is there. So I'm looking for them to come back and retest this area they broke. We had a propulsion move through it, retested it, resold it, resold it. So I'm looking for them to come back and retest that area there to the upside. If we're going to continue market structure short, then that's where I'd expect them to sell, where I would tend to flip short. Pound CAD. Got no trades on pound CAD at the moment. Got out of the longs today. Obviously didn't flip short, so the exit area was here. Yeah, that was where my zone was, and that's where it got me out. So I'm looking now for longs. So I'm going to buy. It's going to look to buy the lows to start with. We're obviously in quite a big downtrend here. So we've got a triple bottom which held. We are gradually starting to make progress now. But this move here was not because of the pound. It was because the CAD had dropped. So are we going to continue short with the CAD? And if so, we're looking for market structure to move back to the upside. But it's a bit aggressive, I think, to buy this. There's so many different levels you could look at on this. It's just a mess of grindiness. To me, it's kind of a flag, or it was a flag until that Trump move, looking to break short. So I'm just going to err on the side of caution. And if it continues to collapse down, i.e. strengthen the Canadian dollar from somewhere, I'll buy those lows, but I'm not really that interested in it at the moment. Pound Swiss got longs on. Next buy is going to need to go down below there somewhere. Don't know where. So looking for them to come and attempt to break out of the range and then fail. Upside target. Support resistance. So this area here. Support, 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 support. Sellers ran the buyers over. All the buyers turned into sellers, and now we're selling. So if we do get back up to retest that, which is about a kind of a 61.8 retracement on that leg, I will get out of the long positions, and that would where I would flip short, but shorts are too expensive, so it won't be doing that. Pound yen. Right, so pound yen I have still got trades on. So I've got longs on it. because I'm in it from previous. So this is the only yen trade I have at the minute. Next buy, obvious lows. Exit on this. We got obviously this support here and this accumulation. So this is kind of where I want to get out. I just want out of this. I'd love something to happen that just spikes against the yen, either spikes the pound or drops the yen for a couple of days until Friday, because Friday's when the rate announcement is. So I'd love to be out of this by the rate announcement, because I've got a feeling that's going to happen. So I'm hoping I can get an exit on it. If by Friday we're sitting here, I'm out. Done. I'll take whatever the tiny little loss is on it. But yeah, can't do much with it at the minute. I'm in it. Pound New Zealand's too expensive to trade. I did have some trades on it, but swaps are too much on it at the minute. It is coming down. So swaps getting better because interest rates are getting a little bit more naturalized, but still not trading at the moment. Pound US dollar, have longs on. I'll be looking to buy up these lows again if it gets down there. My exit target on this. Now we've got Trump in very hard. That is a nice quick exit. I've got 3 positions on it, so it's not particularly overloaded at the minute. So I'll see if we can come and retest this move here that broke the lows. So market structure is obviously bearish at the moment. We've had a much bigger move down. So this is basically putting in a 38 retracement at the moment for a potential continuation short. But the US dollar could flip like a coin any time now. Now Trump's on. He could massively devalue it, or rather power it up, or massively devalue it just by opening his mouth. So there's absolutely nothing to say that we won't be there within 24 hours, or we'll be down here within 24 hours. Yeah, easy to put in, as you can see, 200 ADR moves when he's on board. So bigger targets, more stretch, see if we can get out up there somewhere. But at the moment, it's not been going anywhere for days, so we'll just see what happens. New Zealand dollar CAD out of all of those longs. So this was an exit in loss, just to get out, basically. I just wanted an exit because the trade didn't work out. So got into 5, scrapped it. That's where I was looking for an exit. That's exactly where I got. So now I'm flipped short. Why is the short? Oh, I had this set to not trade in line with swaps, didn't I? On when I had the version 1.3 of the EA running. So that trade was taken with the old one. So I shouldn't really be in that. Although it's only 590. It's not actually that expensive, is it? I'm just going to move that to -6. We haven't got an interest rate change coming on the New Zealand or the CAD, so that shouldn't change. So just changing that up to 6. There you go. So now the swap's turned green. So we'll trade that in both directions because it's not far off. So yeah, I'm short at the moment. So next sell will be back up at this resistance, although that's going to be too close. So we'll look at the origin of that down leg. So this low here got broken by, there's a couple of little accumulations there, and that's the move that broke. So I'll look for them to see if we can come and return to that supply demand zone there. Maybe, which is kind of around about there. So somewhere just above that high. Downside target. I mean, market structure is short. The trend is short. Yeah, so if that's going to continue, we should be able to get out down here, shouldn't we? So it's either going to double bottom, whoops, down here, or it's going to meet this area here, which was the previous support resistance zone. Yeah, so that area there is an easy downside target. So you know, when you're looking at where to get out, it's either, do I fancy a quick, easy exit, assuming that we're going to respect that level, or you could go for that level there. Yeah, support, resistance, support, resistance. So all the market does is it moves from support to resistance, support to resistance. It's the same prices playing out over and over again. So it's either there, or here. So TP1, TP2, TP3, pick. I will see what happens when we get down there, and I'll keep an eye on it tomorrow. New Zealand Swiss, but I might as well go for the home run because Trump's on board. New Zealand Swiss got no trades on. I am looking for longs. So obviously this area here is what they've been buying up. So this is a previous resistance. Flip-flopped around it, then it turned back into support again. Yeah, we're holding range highs. So if we get back down there, I'll buy that low. New Zealand yen not trading. New Zealand US, again, out of all the positions on this one, this was another break-even exit. So 6 trades on this one. Just wanted out. So took an exit, a small loss on it. I think the loss on this was about 100. So yeah, just took a loss on that. Not the end of the world. So next short will be up there. And exits if the US dollar powers up. Somewhere down here. Tricky exit. So I would look for this area here to hold, potentially. Or if they're going to blow through that level, we'll look for a double bottom. So big, nice big target area. So when it pushes down and gets any kind of bullish reaction somewhere down here, get out of the short. US dollar CAD. Absolute mess. What do you do with this? Exit target on it, very difficult. So we've got this area here which broke, which is kind of this little wick which we tapped into, and then we broke above it, rejected it, and then we slammed it, but it didn't come back and retest it. So it's very hard to sort of pick a level down here somewhere for an exit. But if we do break this low, at the moment we're putting in a kind of expanding wedge pattern, because obviously the news. So this is Trump yesterday, this is Trump today. So yesterday he broke the lows, today he's broken the highs. There is nobody in that period that is alive now. All the people that were shorting it are stopped out this morning. Everybody that was long in it was stopped out yesterday. There's no one left. So this could go absolutely anywhere. So if it's going to go down, I will get out somewhere down here. I will then flip long. I'm happy to flip long and hold long US CAD. US CAD should rally, really, if you think about it, and with Trump on board. But we'll wait and see. If we need another short on, I'll see if we can double top today's high. US dollar Swiss got sells on, so next sell is going on above the highs. So if we can come up and just take out that high or double top that high, that'll be in the next short. Exits to the downside for a target, hard. So we got this area here which never really got retested. We got this low here which never really got double bottomed. We got this area here which they did double bottom. So somewhere around there is where the buyers actually gained a bit of momentum. We've got this area here which is support resistance. That doesn't get me out with money, but there's 6 trades on. So for me, to the downside, I just want out of the trade. So I am going to select that level there. It's going to make me a loss, but I just don't want to be in it anymore. Kind of want to reduce a little bit of risk on the US. And US dollar yen, I'm out today. So again, that was a loss. Because the swap costs at the entire trade profit. So although that was actually the exit was just below my break-even line, I think it was around about the break-even line, if not, it was a loss trade overall because I was paying $30 swap costs for a short hold. So this is why it's so important. So now I'm looking to get long only, but I'm I'm just not interested in jumping into a yen in that direction when they're going to increase interest rates on Friday. It could well drive the yen into the floor. They may look at it and go, the interest rates are rising. Who gives a monkeys? Look at your interest rates. They're 0.5. Everyone else is up in the 3s and 4s. They may well still use their carry trade. And it looks like at the moment to me, that is what they want to do. I think this is probably a pullback on a move up. But this is where we're going to hit that intervention level, which is potentially where they're going to drive it back down from. So it's a very difficult thing to trade the yen at the minute from a fundamental perspective. If you're just using pure price action, this is a kind of return to origin on that leg, but this is weeks and weeks ago. Yeah, it's just before Christmas. Everything's done over Christmas. So it's kind of a reset. So unsure on the yen, so leaving it alone. And there we go. That's all those. So as you can see, I've closed a lot out today, a lot of this crap. And this is the beauty of position trading. Closed out all that, closed out the other ones which were in drawdown, all these multiple position trades which weren't working out, all closed out today, and I've lost 0.14. Doesn't matter, does it? The ones that work, pay us. The ones that don't work, let's just try and get out of them. That's what it's all about. Not taking the big losses, but using your account to hold the drawdown. There we go. So that's that. Quick update on the yen strategy, the trend pullback strategy that I've now got running. It's down 5k. It's well within parameters. It's just obviously I'm trading 6 instruments, so the drawdown, which was around about 10%, is 6x'd. So I'm not too worried about that, because obviously one good day is going to easily get all of that profit back. So drawdown, just got out of one on this US dollar yen again on all this movement. So at the minute it's going to be very difficult. I think there's nothing worse than trying to develop and test a brand new strategy when you've got a complete change in market regime. So now we've got Mr. Trump on board. There's a strong possibility there's going to be changes in the yen, there's going to be changes in the US dollar, and there's going to be added volatility. When you're using a stop loss based strategy, this type of movement, Mr. Trump, isn't conducive to making money, because you just get stopped out for absolutely no reason. And this is the problem with all stop loss based strategies. They all work very, very well when the market is normal. When the market has any abnormality, none of them work. And this is the same with this. So it's going to be a testing, I think, couple of weeks for this strategy, but I'm going to leave it on forward test with the money for a month and see what it does. I'm happy with the back testing. I've robustness tested it to death. It only works on yen, so it's only trading yen. It does work on Swiss as well, but not as well. So yeah, see what happens. But if it does survive this month and it gets, I'll do a full analysis after the month is over, and then compare it to backtest results and compare it to previous month seasonality results. If it stacks up for within normal parameters, then I'll probably push this out so that others can use it. But obviously it is a stop loss based strategy, so you know it is going to have down months because it's just going to get taken out by volatility spikes, which is the problem with stops. Yeah. So, but as you can see, this yen is all over the place at the minute. We've got some pairs starting to trend up over the last few days. We've got others which are neutral, and things like the US which are just all over the place, you know. So it's the yen is a very, very, very weak currency the vast majority of the time. So like the pound yen will do what the pound does, the Aussie yen will do what the Aussie does, the New Zealand will do what the New Zealand does. The yen isn't the one that comes into it. But when the yen powers up, every single one of these will make a lot of money at the same time. And that's where the edge of the strategy is. When the yen is trending, not things are trending against the yen, it's when it starts to make its money, which is why it has those in the robustness testing. It had all the stagnation periods and then these beautiful run-ups, and that's when the yen's rallying. So Friday this week, if that yen increase happens and the market decides we like it, this is going to start to make a lot of money. So we'll wait and see, but forward testing is always different to back testing. So want to see it working properly first. There we go. That's it. That's all the levels. So I've redone all the levels. I just need to save that profile so that I don't lose it. Are starting to unravel these CADs, aren't we? Yeah, I think they're going to unravel today. Right, so DAX and FTSE hedges. So the DAX hedge not going anywhere. FTSE's not going anywhere either. So we got no volume today. I think today the market is sitting around going, what's Trump going to say next? I think we're waiting for Trump. We're certainly waiting for the CAD this afternoon, aren't we? So, but I think we're hanging around at the minute. He's asleep at the moment, so we'll give it until, I don't know, probably midday, 1 o'clock, and then we should see things starting to bubble up again. So investors shift back to large cap from small cap. It's Bank of America stuff coming out. There we go. Right, anybody got any questions? Anybody still there? I never know with these member streams who's here. So everybody's very quiet. Nobody's asked any questions. So I assume I'm making complete sense, or nobody's actually just got any questions. But has anybody got anything else I want to discuss? Anything else I want to look at? Anything we covered this morning? It's 9:13, so we've been on for an hour and a quarter. Sarah's still here. That's good. So yeah, so I think I'm gonna have a look at that ORB document in a bit more detail and have a look through it. I have seen multiple documents like that in the past, which is kind of why I started trading ORB, because it's I started doing the strategy about 12 years ago when I was doing stocks, and it's, you know, it's one of the most documented strategies, the ORB strategy, because it's a simple breakout on momentum strategy and it's the easiest way to make money. So there's a lot of documents and studies on it, but this one's particularly interesting because it's using the 5-minute volatility and the direction of the 5-minute candle as well, which is interesting. They haven't done anything on European stocks. That's only based on American stocks. So the 5-minute ORB today was bearish, which means you should have gone short. That didn't work, did it? And it was bearish there, which means you should have gone short. That didn't work, did it? Stuff is never going to work every day. Is it possible, do you think, to use position trading, zone trader on lower time frames, in and out in a day? Yeah, you can. Evil's still here. That's good. So, yeah, I mean, you can do. With the position trader EA, you've got these exit criteria for time-based exits. So close all trades at end of day on a Friday, and you've got number of hours to exit trades. So if you want to trade intraday, and you look at a sort of session, if you like, in general, a session is normally somewhere in the region of 6 to 8 hours. Yeah. So if you wanted to use this on low time frames like M5, try and find something that hasn't gone nuts today. Yeah. So let's say, for example, you wanted to wait for an RSI extension to go short in the London session, which that would have been your first kind of. It's not really. There's nothing moving at the moment, is there? There's nothing. Everything's all over the place today. But let's say, for example, that was an entry long, and you want the position trader EA to scale you in. You're going to need to scale in close. Yeah. So bear in mind average daily range. So if you're taking your first long of the day, either because you've double bottomed the pre-market Asian session or there, for example, and you're taking along there, whether you've hit the buy button, you've used the buttons there, or whether you're using RSI, ADR, whatever your reason to get in, when you're scaling in and out intraday, your scale-ins have got to be much closer together, because to be able to get out today, you can't really scale in more than a quarter of an ADR apart, because price will only move 4/4 of an ADR. Yeah, so ADR is 100%, a quarter of an ADR is 25%. So if you take your first trade and you assume the market's going to go against you all day, you should never be able to get into more than 3/4 trades, even if something does something like 150 ADR. So your spacing's got to be a lot closer together. And then at the end of the session, end of probably London or New York, more likely New York, depending on when you're trading, which is going to be somewhere around 4:30 New York time, which is about 9:30-ish UK time. Shut it all. Yeah. If you're trading intraday, you close intraday. Yeah. So yeah, you've just got to use tighter entries. And your exits also need to be tighter. So if you're going to get in like that and you're going to scale in a quarter of an ADR apart, you want your targets to be no more than a quarter to a half an ADR. So, you know, if the market is going to move up and down 100% of ADR, say, which it's going to do 58% of the time, and you get into a trade and then you scale into another one and you scale into another one, it's moved down by at least half to 3/4 of an ADR, hasn't it? So it stands to reason that you're probably not going to get more than a quarter to a half an ADR move back in the opposite direction, which would be a day which is fully rotational like that. So you can't target too much either. But you could say, I'm going to get in with a bias, scale in with a bias, and if it gets into profit by end of day, I'll put a break-even average on the whole thing, and then hope tomorrow you get a continuation. There's a million ways to do it. And the same with the zone trader, EA. If you're going to do that on lower time frames, so if you're dropping down to M5, yeah, and you would take maybe that there, you're going to need your scaling distances to be closer together, aren't you? So you need to look at the ADR on it. So what's Aussie Yen's ADR at the moment? 125. So 10% of ADR is 112. So that would be there. So maybe 20% of ADR. So when you're looking in here, minimum distance between entries, zone distance from current prices and ATR percentage would be set to maybe 0.2 instead of 0.5, which means that when you get into your first entry, when it draws in the next sell distance, that's going to need to be closer, isn't it? So it's all the same. You just adjust when you're trading intraday. All you're doing is you're adjusting your expectations on price movement, which is the same with the opening range breakout and the SIH strategy. This needs to be between 10 to 20% of the average daily range, not for any other reason than if it's above 20% of the average daily range and I take a break of it, for me to get a 2R, I'm asking the market to move 20, 40, 60% of its average daily range just to get a 2R out of it. Yeah, any more than 20% of a range, I'm going to struggle to get a 2R return. And if you're not got a positive risk reward ratio when you're doing intraday trading, it's not going to work most of the time. You can make it work with smaller, but your strike rate's got to be ridiculously high. And obviously when you're trading intraday, you're trading chop. Therefore, strike rate is difficult to get high because you are trading noise basically at the end of the day. So you just got to adjust your levels. And again, there's no right or wrong level, but use levels. The market moves to areas it's been at before, and the reason it turned there is because there were more sellers in the market than buyers. So it stands to reason that if we get back there, we know that last time there were more sellers than buyers. We know there's going to be some sellers there. Yeah, so for the buyers to push through, they've got to first of all overwhelm all of those buyers, i.e. if there's 100 million shorts there, you need 100 million longs just to absorb those shorts. And then by the time you've broken through, you've spent 100 million. So you haven't got much left in ammunition to get through, which is why then we pull back, because market will find it hard to have an imbalance of buyers and sellers for too long. So look at areas. So, this is with the zone trader EA on a 5-minute chart. I'm just trying to find something better. So on a 5-minute chart, if you bought this zone here, if you just bought that there, for example, yeah, target that. And your next zone to buy is going to be there. Or if you're supply demand based, it will be there. Support, resistance, supply, demand. Yeah, but it's got to be, you're looking to get out on that then. You're looking to get out on that then. Then there. You're looking to get out on that. Yeah. So if you've got 4 positions on there, your average is going to be there. That entire move, you're looking for some kind of pullback before it continues, aren't you? So you absolutely use it intraday. It's just a hell of a lot more work. And a lot more stress and a lot more risk. Some people love it, some people hate it. I used to trade intraday all the time. I suddenly started moving. My mentor said, "What the hell are you doing on the 5-minute charts?" I was, "I'm trying to make money." He was like, "Have you tried the hourly and 4-hourly charts?" Never looked at them. Why would I look at that? It moves up and down in the day. And then you look at the 4-hour charts and the hourly charts, and they look exactly the same. If I took that off of here and said, what time frame is this? That could be a 1-minute chart. It could be a daily chart. It could be a weekly chart. It could be a 5-minute chart. The market does the same thing. It finds areas it was previously couldn't get through, and it tries to get through them again. That's all it ever does. When it gets through them and gets back to them, it can't get back through them because there's too many people wanting to do that, which is why support and resistance exists. It's just imbalance of orders at price points. So it's the same on every time frame. It's just the lower you go, the more noise you see, the less reliable everything becomes. But the more money you can make because the more signals you get. Support resistance zones on a low time frame like M5, you might get 10 to 20 opportunities a day. On an hourly time frame, 1. 4 hourly, once a week. But with that comes over trading, and in bad periods you're going to lose a lot more than you will when you win in good periods, which is why it's so difficult. But it's down to the person. Some people are great at it, some people are awful, and you won't know it until you try it. Should we be putting a final safety stop after the last scaling position? If you want to. But so for Trump era spikes, but that's exactly what they are, spikes. So do you want to be stopped out on a spike that goes back up? If you want to, you can. Again, if you use a stop and it gets stopped out, it's done its job. But look at the Canadian today, pound CAD. If you were short pound CAD today from yesterday, right? Look at where I got taken out with my profit today. Yeah. If you had shorted that M pattern reversal yesterday and you gave it 1 ADR breathing room in case there was a spike, how annoyed are you now? It's just coming back to break even. You've just taken a 1 ADR loss because Trump opened his mouth. Is this bullish? No. This is, no one is ever going to agree with me with stops. This is why there's 30 to 50 people a day in my live rooms, because everyone goes, he doesn't use stop losses. What an idiot. Yet I'm the one sitting here generating 11% profit this month where everyone else is getting chopped to pieces. And yes, there's months where I have losses as well. But the months I have losses, everyone else is having double the losses because they're taking twice as many stop outs. So, stops are an order type in the market. Everybody is taught you have to have a stop because you have to control risk. But the only reason you're told to use a stop is because you are told to risk 1 to 2% of your account every time you press a button. That's ludicrous to me. On a low time frame and with a tight stop, and you're going for a 15R on a 1 minute chart, fine. But you will get stopped out 60 to 70% of the time because the market goes up and down all the time. So by its very nature of being a binary object, when you press the button, it will hit your stop loss. And then it will go the way that you wanted it to, because after it's gone down, it will go up. And if it goes up more than it goes down, you're going to be cross, which is why everybody gets cross all the time when they get stopped out, because you're basically telling the market to place an order to take all your money away, regardless of whether you're right or wrong. So everybody that says it's crazy to use stop losses, they're sitting there not making any money, most of them, aren't they? Because they're using stop losses. It's an order to stop your loss going further, but it's to stop your loss going further if price goes further. If it doesn't go further, it's stopping your profit. It's just an order to get out of the market. Basically, you're saying, if this does what I said it was going to do, which is a return to origin move, which is a Trump move, which is what I've been talking about, that is what's going to happen most of the time. But you don't want to place an order there because you don't know how far it's going to go. But when you look at your P&L, there's nothing to stop you going, holy crap, 5%, shut it. But if you put an order, or you make the position trader EA, that new input we've got for drawdown control, close all trades at 5%, for example. If you set that to 5% and that spike was 5.2%, you take a 5.2% loss. However, if you'd have added another position and it came back down to there, you could have got out a break even. Why take the 5% loss? Look at it. It doesn't happen fast enough. If you're worried about a spike hurting your account too much, you've got too much size on. This is I think I cover it in the bootcamp. In that, if you press one of these buttons and immediately you're worried about it, the lot size is too high. Yeah. If you can press this button, walk away and go on holiday for a month and then come back and not worry about it, spot on. Because pressing this button shouldn't make you panic. If it does, there's too much risk. Because you should allow the market to move up and down for a few days without hurting you. Because that's what it does all the time. It's all it does. And it will have spikes on news. And spikes are typically undoing legs. Look at the propulsion fills that we've got. So all of that big sell order took 1, 2, 3, 4, 5 days. For 5 days, it just went up and down. Yes, it made new highs, but it didn't really go anywhere in the grand scheme of things, did it? It just retraced 50% of what it did in 48 hours. But it's a personal thing. It's a preference, whether you use stops or not. And there's nothing wrong with it. The danger at the moment, the reason to use them at the moment is like this. When Trump comes out and says, I have just signed an executive order to put 25% import duty on Canadian imports, then if you're the wrong direction on it, you probably want to get out, because it's going to do that. Yeah, it's going to flag break, leave a propulsion gap like that, and it's never going to come back to it. Well, it may not come back to it for months or years, maybe. I don't know. But that, yeah, you may want to. But what if it does that when he signs the executive order, and then it does that, and then it does that, and then that? There's an exit. But if that is 12 to 15% drawdown on your account, it's probably too much. If that is 3 to 5% drawdown on your account, fine. So I would say you only really want to use very hard stop limits if you are in very high drawdown, because it is very wrong And if Trump says something that drives it against you, you could get that 7% drawdown turn into 20% drawdown within days, in which case then you want to kill it. My rule is, and if you've been in here for a while, you'll know I've traded lots of things in the past where I've been in sort of 5 to 10% of drawdown. Oil was a good example. I cut it at 9-10%. If something gets to 10% there on its own, I'm out and I'll take a big 10% loss. But it's so unbelievably rare to get to 10% in drawdown on one individual instrument. Go and back test with the Position Trader EA. You will find, if you do a 3 to 4 year back test, there may be one, maybe two times where it jumps over 10% drawdown. And that will be a parabolic shift in interest rates, followed by the opposite cross having a parabolic shift in the other direction. And then it will go unbelievably parabolic. You're going to get it every now and again. And it's not that there's something wrong with the strategy. It's just the timing of the pound announcement and the timing of the CAD announcement in opposite directions happened to be within a week of each other, meaning that you had a big move of 150% of its weekly range and then a new news which moved 150% of its weekly range. So you've got 300% of the weekly range done in a week, which is just doesn't happen. Yeah, it just doesn't happen. It happens 1, maybe 2% of the year. But with Trump, you're going to find most of these spikes are not holding because it's the buy the rumor, sell the news. It's a rumor. He's thinking about doing something. Holy crap, is he? Yeah, he's thinking about it. Oh yeah, he hasn't done it. He's done it. Oh right. That's what happens after he's done it. But if he's thinking about it, it's not real. The market panics in case he comes out an hour later and says he has. You'll find as well that you'll get this. We haven't had it today because it's early doors. But what you will get is him say something like this. Yeah. And it will come from a source. And then about an hour later, half an hour later, or whatever, you'll get a spokesman from Trump's government basically saying the opposite thing and unwinding it. So it's a case of, holy crap, you've seen what the idiot's done now. Yeah, I know. Okay, we ought to say something about this. Mr. Trump, blah, 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 blah. Okay. What Mr. Trump meant to say was, and then it comes back the opposite direction. Yeah, so you'll get a red news unscheduled followed by a red news unscheduled, undoing the previous red news. And that spike, if it stops you out, will be the most annoying thing you've ever had in your life, because all that's going to happen is you just take a loss after a loss after a loss because he's opened his gob, and it's just frustrating as hell. But like my pound CAD today, it's also incredibly profitable. Yeah, it's binary. Every time he opens his mouth, you've got a 50-50 shot of making a load of money. That's basically what it is. Euro US. I think the euro might be a little weak today. Yeah, a little bit of weakness in the euro coming through this morning. Is that US strength as well? No. Maybe. Yeah, a bit of strength in the US and a little bit of weakness in the Swiss franc at the same time. Does make sense not to use them. Hard to change mindset after years of using them. Yeah, but that's why it works, James. You know, this is the thing. Start small. This risk, put it at 0.1% over an ADR. Yeah, and obviously adjust your targets accordingly. But look for a bit of movement. Look for half an ADR or 1 ADR. But if you have a tiny risk, you can't get hurt. And you prove to yourself that the market moves. This is what this is all about, position trading, when you're starting out. It's about proving to yourself that the market goes up and down. you know it in your heart. That's all it does, because it doesn't matter what instrument you put on your chart. You see it move down, you see it move up. It moves down, up, 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 down, down, down. That's all it does. Yeah. After it's moved down, it goes up. And after it's moved up, it goes down. Because it can't do anything more than two things. It's binary. It goes up and down. There is time, which is our x-axis, and there is up and down. So if you get in wrong and then it goes up, you can get in wrong again. And in theory, you can do that indefinitely. If you used a 0.01 lot size and did a 4-year back test and just let it run, it won't blow the account. Because even if it went down for 6 months in a row, it will go up again. By 50%, 30%, 61.8 or 100. Yeah. Doesn't matter what time frame you look at. All time is a candlestick is a measurement of price movement over time. All a candlestick is something that the human race invented to quantify binary price action. Yeah. So you go to look at a daily chart and you go, holy crap, that's COVID. But this thing moved down for 1, 2, 3, 4, 5, 6 months solid. Then it moved up for 3 months solid and undid 50% of that move. If you'd bought here, if you bought at the high, which you wouldn't do, but if you did, you scaled in for 6 months and then got out after 9. If you used a 0.01 lot size or 0.05% of your account, or probably 0.01%, backtest it. Go and find the Aussie dollar Swiss. Go to 21st of December 2020 and press the long button in the strategy tester. Let the EA scale into for you and then wait for that year to finish. You won't have blown the account, because all it does is it goes up and down. Yeah. Oh my God, it went down for an entire month. Then it went nowhere for 3 months, but you had an exit if you wanted it because you scaled in all the way down there. But let's say you didn't get out and it went down for another month, and then it pushed up, and then it went down for another month, and then it pushed up. What it's actually done is a 38 retracement on that leg. Because when the banks are in profit, the only way they can realize this huge amount of P&L that is sitting open on their accounts is to get rid of the orders, which means doing the opposite to what they did to create it. To create a positive P&L, you have to buy in the right direction of movement or sell in the right direction of movement. But to realize the P&L, you have to undo the move you just did by doing the opposite. When you press the buy button, you are basically saying, are you looking to sell to me? Yes, I'll have your order. When your price goes up, when you press the sell button, what you're actually doing is finding someone looking to buy, and you're giving your order away to them. So when you buy, you're a buyer. When you sell, you're a seller. When you exit, you're a seller. You've got to do the opposite, which means that if price is pushing up to here and the banks and institutions are sitting on $25 quadrillion in profit, they can't spend it unless they realize it. To realize it, they have to sell it. Think of it like a stock. If you buy Tesla stock, it's absolutely useless to you unless you sell Tesla stock and turn it into money. Buy, sell. Yeah. It's over leveraging is what kills everybody. Oversizing positions and not letting the market move. The market is going to move up and down all the time, which is why it's impossible to try and pinpoint an entry, because this is a random thing based on random price action entered every day from banks and institutions. Unless you have a crystal ball or a phone line into every bank and institution that's placing an order today, and they are telling you the exact volume of orders they're placing and what time they're pressing the buttons, no one on the planet can predict price action today. No one. And therefore, no price action on any day will ever replicate itself. There are no 2 days in trading on any instrument that have ever replicated themselves, because there has never been the same amount of orders in buy and sell ratios throughout the day, ever, because it just doesn't happen. It's random. So therefore, by the very nature of random market movement, you will be stopped out on the high proportion of your orders because you're going to get it wrong. Because you're going to flip a coin. That's all you're doing. When the RSI gets extended to the upside and you flip a coin and go short, it can keep going up for another 6 months. Yeah, just because this squiggly line gets above that flat line doesn't mean it's coming down. There's a higher probability of it coming down, but it might not do. So you need to change your price that you took there and move it up. If price goes up, you move your price up. How do you do that? By taking another order, which moves your average up. So therefore, you can get out when the price goes the other way. You've just got to try and stick as close to price as you can as it's going the wrong way. To do that, you need small lot sizing because you've got to survive the squeeze. The only way you survive as a position trader is allowing your trades to play out over time, because the banks will move it when the banks will move it. You need to stay on the opposite side of the bank's orders while they're doing it. That's it. That's position trading. Which is why it's so difficult for people to get their mindsets around, because it's the opposite of what everybody else is telling you. The reason it works is because it's what the banks do. Yeah, the banks don't go long, put a stop loss down there that'll lose them 25 grand. You get shot. They go long, they wait for price to move, and they buy it at a better price. They dollar cost average into something that's making them more money. It's like, holy crap, we can buy it cheaper, guys. Brilliant. Let's have some more. Because they've got the power to move it. We haven't. And because we can't move it, we have to rely on their coattails, basically, and their footprints, where they've been. So this is where they were buying again and again and again and again. And this is where they were selling again and again and again and again and again and again and again. Yeah, that's the sells. Those are the current buys. So it's either going to blow through into the next load of buys, or it's going to go up into the next load of sells, because it's binary. You can only do one of those two things. I can give you 100% guarantee where price is going. You give me any chart on any stock anywhere on the planet, and I can tell you where it's going with 100% certainty. I won't tell you which of them it's going to hit, but I can tell you where it's going. It's either going there or it's going there. 100% guaranteed. One of those two things is going to happen. Your job is to decide by flipping a coin which of those it should be, and to enter the market at a time which gives you a slightly higher edge than everybody else. That's your job. And then you've just got to hold on tight and hope. It's trading. That's why it's so difficult. And that's why every single course you ever do will never work, because they're all trying to pick the top and the bottom of the move. You can't do that because it's random. But they'll try really hard, you know. But you only realize this after an age of trying to figure out how this thing works. That study that I just got up from the Swiss Research or Finance Institute, yeah, this proves random probability, basically, because they get it wrong most of the time. The strike rate's not very good. But what is good is when they get in, they just hold it. So it's not about picking direction. They're saying, well, if the first 5 minutes worth of sellers were overpowering the buyers, if that's going to continue for the day, let's do that. But the if is 50-50. That's it. We've had a bull open or a bear open. We've had a bear open. Let's short it. Okay, that's great. Oh, it didn't work out. No problem. But they're limiting their downside risk, but the upside risk is totally unlimited. But it's a totally different way of trading. It's all about probabilities, isn't it? Got to go. Good, cool. Okay, that's fine. I've waffled on now. We're nearly 2 hours. The more I do not use stops, the more it makes sense. This is my first month ever making a profit. Cool. That's what it's all about. But this is the thing, isn't it? You will make a profit. It's hard not to make a profit when you don't take a loss. This is the thing. And this is the thing that worries everybody. And this is what I absolutely get. Look how long I was in this thing for. I mean, this Aussie US, which I got out of yesterday. I've been in it since the 7th of November. Yeah, we're in the end of January, so there's 6-8 weeks sitting in it wrong. But I'm pretty sure we'll be up here somewhere, but I'm not going to risk that. I'm going to get out. That's what I want to do. But look at that move. The banks have got a lot more to do to unwind those positions, haven't they? But if you'd have used a stop loss trying to pick the mean reversion long in this, there, and let's just say you were using RSI, there are so many signals you've had to buy it. You've had 1, 2, 3 signals to sell it. Yeah, which is why it's hard to get onto trends, because trying to get into a trend is hard because it's already gone. You've missed it. So trying to jump onto a trend is incredibly difficult. And then when you're in it, it's incredibly difficult to hold it. But, you know, it's same with trend trading. If you get in and you say, right, I'm going to sell that pullback and it works, brilliant. If that pullback doesn't work and it comes up to there, sell that. Think fib. Yeah. So when prices moved up there, you can buy the 23, buy the 38, buy the 50, buy the 61.9, buy the 71.8. Yeah. And if it gets to 100, buy the 100. 1, 2, 3, 4, 5, 6 trades trying to get into a trend pullback. What if that is the peak formation high and you've actually got in trying to buy the very last leg before it goes in completely the opposite direction? Yeah. If these trades are small enough, you can go to 200%. And if it's done that, it's probably going to want to pull back, isn't it? And that's where you would get out. But it's all about not trying to force or predict too much where the market's going. It's about getting into the market and surviving in the market, letting the market do what the market does. You're going to have days where the market's going to prove you right over and over again. You're going to have days where absolutely every entry goes red immediately and they're suddenly looking at a load of red and you sit in that red for 3 weeks. But the reason you're sitting in that red is because you're waiting for it to turn green. That's it. That's the mindset change that people struggle with. But it's the mindset that you will be taught in fundamentals in banks and institutions. Is this is how the market moves. So you need to scale in and out of the movement. There's a lot of people out there, David Paul was one of them. Dr. David Paul, who's no longer with us. He was a scalper and used price action scalping, and most of the time on indices. But he was kind of renowned for doing totally the opposite to what everybody else was doing. So Dr. David Paul would buy this, whereas everybody else would be selling that breakout. He would buy the breakout in the opposite direction because he knows that the amount of force it takes to break this level of buyers, this iceberg order that's been sitting here by banks and institutions for such a long time, to break that is incredibly difficult, and the force required of orders will not be able to be sustained. So when it breaks it, you buy this and you know it's going to ping back, and if it will be a change in structure, it will then continue. But he was buying all of these. Yeah, sell that. Yeah, it's kind of the stop run mentality. But it obviously got manipulated and changed into something else by someone else. But, you know, it's the people that do the opposite to everybody else that make it in this. Because if you try and follow the herd is always wrong. Yeah. Don't follow the herd, follow the banks. Yeah. And be with the banks. That's it. But you're never going to be on the right side of the banks, virtually, because you won't be holding it like the banks do. Because they're going to move it up and down too much. So, anyway, I'm waffling now. Right, I'll leave it there. I'll be back on tomorrow afternoon. We've got the New York session tomorrow, so we'll be trading the NAS and the Dow. Just quickly look at what's going on. No movement today, is there? Nothing's happening today. So we'll wait and see what happens. But difficult to do anything with no momentum. So yeah, back on tomorrow afternoon, and then on Thursday I will try and do some work on that other opening range breakout strategy document, and see if I can put something together to do some testing, really, and see if we can test their theories. But I'm just trying to figure out how to use momentum, volume, relative volume, because we don't get it in CFDs. So I'll have a think about ways of modeling that, basically, and see if we can figure out a way to make some dough, or at least test to see if the theory's there. And then it might be a case of manipulating the ORBEA, if it's even possible, to sort of fall in line with the strategy. So we'll see. But if there's anything else you want to cover, stick it in the members group. Yeah, ideas wise. But yeah, today was a bit of a mishmash because everything has gone wrong. So now I've got to go and turn off my fuse box, turn off my lights, and figure out why that light switch is not working, which is going to be fun. So if I'm not here tomorrow, you know why. I flicked the wrong fuse. So anyway, hopefully not. Right, I'll be back tomorrow. Anything you need, let me know. Other than that, I will see you next time. Have a good day.